Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I talked a little bit before about market conditions, how strong the economy is right now, unemployment is going down, housing is starting to come on the market in greater numbers, but the prices are definitely up. They went up about 12% in a very short period of time. And of course, the worry for a lot of investors is what's going on with rents? What are we keeping up with these prices with the rental market? And the answer very securely is yes, they are. They're going up at a percentage rental appreciation in terms of how housing is doing. I'll give you an example. We've had this duplex community for about 4 years. We were getting really good rents, $1.05, $1.07 a square foot. Right now we're getting $1.21 a square foot on those duplexes that are 3 and 4 years old, and we have new ones coming on the market that we think we can get even more. In the case of single family, especially new construction, where we were getting 90 to 94 cents a square foot, we're seeing $1 to $1.04 a square foot at this point. Now, if you're listening to this and you're somewhere else in the United States other than Oklahoma, you're going, well, that doesn't sound great. I mean, I want more. Well, the other thing you have to consider is our taxes are basically 1.14%, which is very, very low. Our insurance is exceptionally low here for full type coverage. And so these are the things that are really going to help you out in terms of cash flow, your cash on cash return, your long-term return that you're getting for wealth building. So we're seeing very, very positive things happen. Now, we have to be careful, of course. We have to make sure that we don't oversaturate the market. And so we're opening up new subdivisions, new areas where, we're keeping the percentages low. And this is also that supply and demand are extremely important. Now, the good news for us is that we've been in this business of being a pure investment real estate brokerage for a long time, and that's all that we do. And so we're constantly working on new statistics, new data, trying to find out what's going on in the marketplace. We don't pay attention to really anything else but what benefits our investors. And the thing that benefits our investors versus other areas is cash flow. Now, I'm not going to say that appreciation isn't good, and there's some markets that are appreciating more than we do. But at some point, and I've seen this in some of these markets, what you can buy for $230,000 here, maybe $350,000 there or more, and the problem is negative cash flow. And we have to take those two things together, positive cash flow and appreciation in terms of calculating your long-term return. So cash flow is a big factor, and it's also a predictable factor. It's the thing that we know month after month, year after year. We can say we have this trend line and we know exactly where it's going. Appreciation, not so easy to be able to say what that's going to do because we're having to project too far out in order to know that. So the good news, both single families and duplexes are doing extremely well. We're finding existing homes in really terrific areas. We're doing an analysis of the area to see how many rental properties are there. We know in new construction we have better control on that, but existing construction, we're finding those high rents also. So if you're an investor, this is a terrific place, the 4th most affordable market in the United States, over $1 million. We've got it going, the rents are up, it's a good time to buy.